Imagine planting a single seed. It's small, almost insignificant. But given enough time, care, and patience, it grows into a tree. And that tree produces fruit. And inside every fruit are more seeds, each with the power to grow a forest. That's how billionaires think about money. While most people chase quick profits, flipping, trading, gambling, the wealthiest minds on earth quietly use time and compounding to turn small sums into massive fortunes. Warren Buffett started with just $100. Today, that $100 would be worth more than $800,000 if it had been invested and compounded over the same decades he's been in the market. Albert Einstein called compounding the eighth wonder of the world. He said, "Those who understand it, earn it. Those who don't, pay it." This is not a story about luck. It's not even a story about intelligence. It's about a single principle. A principle so powerful that it can transform ordinary incomes into generational wealth. And in this documentary, we'll break it down step by step, how billionaires use compounding, reinvestment, and time to make their money work harder than they ever could. Welcome to the power of compound investing, where $1 isn't just a dollar, it's the seed of a financial forest. The magic of compounding, how time becomes your greatest investor. Most people believe wealth is built by earning more money. They think if they can just get a bigger salary, win the lottery, or start the next big business, they'll become rich. But billionaires know a deeper truth. Money itself can become the most powerful employee you'll ever hire, if you understand how to make it work for you. That secret is called compounding, and it's not magic, even though it looks like it. It's mathematics. It's patience. It's time. Think of compounding like a snowball rolling down a hill. At first, it's small and unimpressive. But with each turn, it picks up more snow. It gets bigger, heavier, faster, until it becomes unstoppable. Money behaves the same way. The earlier you start rolling that snowball, the more unstoppable it becomes. Let's look at a real example. Imagine you invest just $1,000 in the stock market, and it grows at an average annual return of 10%, which is roughly what the S&P 500 has averaged over the last century. After 10 years, that $1,000 becomes about $2,600. After 20 years, it grows to $6,700. After 30 years, $17,400. And after 50 years, over $117,000. That's the power of exponential growth. You didn't work harder. You didn't trade your time. You didn't even add more money. You simply let time do the heavy lifting. Warren Buffett often says his wealth comes from a combination of good genes, compound interest, and time. He made 99% of his fortune after the age of 50. Not because his strategy changed, but because time finally took over. The snowball became a financial avalanche. And here's the most powerful part: compounding doesn't just multiply money, it multiplies decisions. Every dividend you reinvest buys more shares. Every share you own earns more dividends. It's a self-feeding wealth engine that accelerates as it grows. Billionaires understand this deeply. They don't rush. They don't chase quick profits. They plant seeds, and they protect those seeds over decades, knowing that the tree they grow will be worth far more than anything they could earn in a single season. And that's why the first law of wealth is simple: start now. Start small. But start. Because time is the greatest investor you will ever have, and the sooner you invite it to work for you, the richer you become. Reinvesting, the hidden accelerator of wealth. If compounding is the engine of wealth, then reinvestment is the fuel that makes it roar. Most beginners make a crucial mistake: they invest once, and then spend the profits. But billionaires? They almost never cash out early. Instead, they reinvest every dollar their money earns, creating a compounding loop that grows larger and faster with each cycle. Think of it like planting a tree. The first year, it produces 10 seeds. Most people take those seeds and eat them, enjoying short-term gratification. Billionaires plant those 10 seeds back into the ground. Next season, they have 100 trees. Eventually, they have a forest. This is exactly how dividend reinvestment works. When a company pays you dividends, a portion of its profits, you have two choices: spend the cash, short-term satisfaction. Reinvest it to buy more shares, long-term wealth. Here's where the math gets exciting. Let's say you invest $10,000 in a stock that pays a 4% annual dividend and grows 6% per year in price, a 10% total return. If you spend the dividends, after 30 years you'll have around $57,000. But if you reinvest every dividend, your total grows to over $174,000, 3 times more without adding a single extra dollar. This is the secret behind Warren Buffett's empire. He doesn't sell his stocks for quick wins, he lets dividends buy more shares, and those shares generate more dividends, and so on. That's why companies like Coca-Cola have paid him billions, not because he sold the stock, but because he kept letting it compound. One of the most powerful tools for everyday investors is something called a DRIP, a dividend reinvestment plan. It automatically uses every dividend payment to buy more shares, even fractional ones. Over decades, this small decision transforms a portfolio from a small sum into a financial machine. And remember this, reinvestment works even with small amounts. A $100 dividend reinvested every quarter might not feel significant now. But in 20 years, that same $100 reinvested again and again could turn into thousands of dollars in additional returns, all without you lifting a finger. Billionaires treat reinvestment as sacred. They understand that every dollar that leaves the compounding cycle is a soldier leaving the battlefield. Keep those soldiers working, and they'll build wealth you never thought possible. Time horizon: why billionaires think in decades. Most investors think in days, weeks, or months. Billionaires think in decades. And that single difference is one of the most powerful wealth-building secrets in the world. Here's the truth: compounding doesn't reward speed, it rewards time. The longer you let money work, the faster and more aggressively it multiplies. But most people never give it the chance. Let's do the math. Imagine you invest $10,000 at a 10% annual return. After 10 years, you'll have about $25,900. After 20 years, $67,000. After 30 years, $174,000. After 40 years, $452,000. Notice something? Most of the growth doesn't happen in the first 10 or even 20 years, it happens after that. That's the power of exponential acceleration. Compounding is like a rocket: the first stage is slow and heavy, but once momentum builds, the growth is unstoppable. Warren Buffett is the perfect example. He made over $70 billion of his fortune after his 60th birthday. Why? Because he stayed invested. He didn't trade in and out. He didn't panic during market dips. He trusted the math, and the math delivered. This is where most investors fail. They get impatient. They sell too early. They chase short-term profits. And by doing so, they cut off the most powerful part of compounding, the exponential curve that only appears with time. Billionaires know that real wealth isn't built in a year, it's built over decades. They design their investment strategies with 20, 30, even 50 years in mind. They ignore the noise of daily price movements and focus on one thing: staying in the game. Think about it this way: if you plant a tree, you don't dig it up after 6 months to check if it's growing. You water it. You protect it. And one day, it shades an entire forest. Your money is no different. Time is the greatest multiplier you'll ever have, and patience is the price of admission. The power of consistency, why small, regular investments beat big, rare ones. Most people think they need a lot of money to start investing. Billionaires know the truth. It's not the size of your investment that matters, it's the consistency of it. Consistency is the silent force that turns compounding into a wealth-building machine. Even small, regular investments, if done long enough, can outperform massive one-time sums invested too late. Let's look at an example. Imagine two people. Person A invests $200 every month starting at age 25. Person B invests $1,000 a month, but starts at 40. By age 65, Person A will have invested $96,000, but their portfolio will be worth about $1.1 million, at 10% annual growth. Person B will have invested $300,000, but their portfolio will be worth only $725,000. Why? Because Person A gave compounding time, and did it consistently. The key isn't how much you invest, it's how early and how regularly you do it. This is why billionaire investors love dollar-cost averaging, investing a fixed amount regularly, no matter what the market is doing. When prices are high, you buy fewer shares. When they're low, you buy more. Over time, this averages out your cost and reduces risk, all while keeping your money compounding. Warren Buffett calls this approach the ultimate set it and forget it wealth strategy. It removes emotion, eliminates timing mistakes, and turns investing into a habit instead of a reaction. Think of it like building a wall. One brick a day might not look like much, but after years, you'll have a fortress. Consistent investing works the same way. Each small contribution stacks on top of the last, until one day, you're standing on a mountain of wealth. Billionaires don't wait for the perfect moment to invest. They understand that time in the market beats timing the market. And they know that even the smallest action, repeated consistently, can build unimaginable fortune. The psychology of staying invested, how billionaires win by doing less. Most people think investing is about picking the right stock or timing the perfect trade. Billionaires know that's only a small part of the equation. The real secret? Staying invested. It sounds simple, but it's one of the hardest things to do. Why? Because the market plays with your emotions. It rises and you feel unstoppable. It crashes and you panic. Most investors buy high and sell low, sabotaging their own wealth because they can't control their psychology. Billionaires operate differently. They understand that volatility is not risk, it's opportunity. They know that downturns are temporary, but compounding is forever. Consider this: the S&P 500, the U.S. stock market index, has suffered dozens of crashes, corrections, and recessions in the past century. And yet, over that same period, it's delivered average annual returns of about 10%. The investors who stayed invested through the chaos became wealthy. The ones who jumped in and out missed the biggest gains. A study by J.P. Morgan found that if you invested $10,000 in the S&P 500 and stayed fully invested for 20 years, you'd have about $65,000. But if you missed just the 10 best days in the market during that time, your return would fall to $33,000. Miss the 20 best days, and it drops below $20,000. This is why billionaire investors like Charlie Munger famously say, the big money is not in the buying or the selling, but in the waiting. They view market dips as discounts, not disasters. They see fear in the market as a chance to accumulate more wealth, not to run away. And most importantly, they trust the long-term power of the system, because history is on their side. Remember, the stock market is a machine that transfers wealth from the impatient to the patient. Billionaires aren't smarter than everyone else, they're just calmer. They don't let short-term noise distract them from long-term growth. And that's why they win. From small investor to millionaire, the long-term wealth blueprint. Every billionaire investor started with one thing: a small amount of money and a big belief in time. They didn't have secret formulas or insider tips. What they had was patience, discipline, and a plan. And the truth is, you can follow that same blueprint. Here's the 5-step wealth-building formula billionaires live by. 1. Start early, even small. The earlier you begin, the more time becomes your ally. A $100 monthly investment started at 20 can grow into over $1 million by retirement, even with average returns. 2. Reinvest everything. Never let your money sit idle. Reinvest dividends, profits, and gains so they keep multiplying. Every dollar should be a worker building your future. 3. Think in decades, not days. Ignore the noise of short-term market moves. Focus on what your money will become 20, 30, 40 years from now. That's where compounding does its real magic. 4. Be consistent, no matter what. Set up automatic investments. Treat them like a bill you must pay, to your future self. Consistency beats timing, luck, and even talent. 5. Stay the course. Market crashes, recessions, and panics are part of the journey. They are not signs to quit, they're opportunities to buy wealth on sale. Billionaires don't panic. They double down. The reality is simple: building wealth isn't about being lucky. It's about creating a system that keeps working for you, even when you're asleep. And here's the most powerful part: this system is not reserved for the ultra-rich. It's available to anyone with patience, discipline, and belief in the long term. If you master the principles of compounding, reinvestment, consistency, and time, wealth stops being something you chase and becomes something you build. So, start planting the seeds today. Because 20 years from now, you'll either wish you had, or be grateful that you did. The question is, which future version of you will exist? The power is in your hands. You now understand one of the greatest secrets in human wealth creation: not a trick, not a shortcut, but a timeless principle that built empires, created billionaires, and transformed ordinary lives: compounding. This is how Warren Buffett built an $100 billion fortune from nothing. This is how ordinary investors turn small savings into generational wealth. And this is how you can change your life, starting today. Because here's the truth: the biggest risk isn't losing money, it's doing nothing. It's waiting for the perfect time. It's telling yourself that investing is for someone else. Wealth isn't reserved for the privileged, it's reserved for the patient, the disciplined, and the relentless. And every day you wait is a day that compounding could have been working for you. So take action. Start today, no matter how small. Let your first investment be the foundation of a future you can't even imagine yet. And if this documentary opened your eyes, if it changed how you think about money, time, and wealth, then your journey with us is only just beginning. Join the mission. Subscribe to Trillies, where we don't just chase money, we build legacy. Like this video if it gave you clarity. Share it with someone who needs to hear this message. And comment below, what's the first step you're taking today toward your financial future? Because remember, great fortunes never start with luck. They start with a decision, and the courage to act on it. This is Trillies, where wealth isn't just something you earn, it's something you become.